Markets breathed a sigh of relief after US President Davos' speech yesterday, not because it was well received, but because it was less aggressive than feared by many. The much-awaited comments on Greenland turned out to be softer than expected, with President walking back on the idea of a military action to take it. We even had a rollback of tariffs on several European countries. And that was enough to spark a risk-on reaction, of course. Equities rallied, gold fell, the cocoa trade is in full force this morning, but the unpredictability remains as elevated as it was before the US President's Davos speech yesterday, as the need for diversification. So welcome to Swissquote's Daily Market Talk. It's Thursday, January 22nd. I'm İpek Özkardeşkaya, and everything that I will say here are based on my own opinions and analysis, and this is not financial advice.
This show is brought to you by Swissquote.
The US President was in Davos yesterday, in case you missed, and he gave a speech. A long speech in which he said plenty of things that didn't necessarily appeal much to the elite audience in the room, but his much-awaited commentary on Greenland, awaited with great fear and pessimism, was not that aggressive. He said that he still wants Greenland. At some point he called Greenland Iceland, raising worries about whether this was a mistake or he really meant it. But in fine, he said that he won't go into Greenland and take it over by military force, and that he drops the latest tariffs on 8 European countries that didn't like the idea of Greenland being bought by the US. So the markets rallied with joy yesterday. Now yes, this is pathetic, but this is how the markets function since last year. Sell the punch, buy the pullback. The now famous taco trade, Mr. T always chickens out. So I invite you to look at key places where the market reaction was significant. Gold in the first place fell, but the price of an ounce remains above the $4,800 level this morning. So it did not get smashed either, as a warning that investors around the world are still somehow skeptical about what's going on. And it's not only investors, the central banks are replacing their US Treasury holdings by gold since last year, and this trend can only continue and strengthen as the US international policies become blurrier and more unpredictable by the day. And that regardless of the short-term up and downs in the market mood or in US president's mood. In the FX space, the US dollar rebounded yesterday on this de-escalation of the tensions around Greenland. The US 10-year yield retreated, also pulled back by a rebound in Japanese bonds that pulled long maturity Japanese yields lower there after the early week stress, which almost looked like a flash crash there. The dollar yen is up this morning as the Japanese yen bears are shorting like there is no tomorrow, but a move above the 160 level will likely be compromised by a direct FX intervention or a threat of an intervention by the Japanese authorities. Because the Japanese authorities do not want to see their currency weakening this much. Elsewhere, the euro-dollar is trading lower this morning as well, giving back early week gains, as it is the case for cable, while losses in the Swiss franc are being reversed this morning, which is another hint that the risky sentiment, the anxiety, is not over just yet. In the equity space, however, you can feel the cheer. The S&P 500 rebounded yesterday more than 1%, and Nasdaq 100 gained 1.36%, with Nvidia jumping nearly 3%, as the company's CEO Jensen Huang said in Davos yesterday that scaling AI infrastructure will take trillions of dollars in investment. So Disca Corp, which is a high-precision semiconductor processing machine supplier to TSMC that in turn manufactures the chips for Nvidia, jumped 17%. SK Hynix and Samsung, the Korean providers of memory chips, extended their rally as well, pushing the Korean Kospi index to a fresh record high level. At this point, the Korean market index is up by 20% since the year started just 3 weeks ago. And that optimism is being topped by the news that OpenAI is now looking to bring in more investors from the Middle East. So that's good news, but interestingly, not everybody in this famous OpenAI circle is reacting positively to the news since yesterday. Oracle, for example, fell 3% yesterday, while Microsoft declined more than 2%. On the other hand, Intel jumped more than 11%, which is a very interesting move, mind you, for a company that's just about to announce a further decline in its earnings and in its revenue due to its AI delay and pressure in the PC market. So let's see how the earnings announcement goes for Intel today after the bell, and whether Intel could keep a part of these gains. Well, it could even extend them, but let's see. I am not really sure that Intel has made miracles last quarter. Now, zooming out, overall the market mood is better. As you imagine in the markets, European futures are also looking bullish this morning at the time I'm talking here, with the Euro Stoxx futures up by more than 1.20% at the time of talking, determined to benefit from the telco trade version 2.0, and Nasdaq futures are leading the gains among the US major indices. Now, I don't want to bring negative thoughts here, but this season of telco gains could be less impressive than last year's, because one, well, there is no clarity on Greenland today, even though the fact that the Europeans could finally draw the red line is a good development. And two, and more importantly, there has been no major stress in the markets regarding the latest issues. Losses were relatively meager, and the rebound that will follow should be too. The market stress is ending even before it started, and the telco was always in investors' minds. So what's next? Well, the markets will react the way they do in the coming months emotionally to all of these US headlines. There's no changing to that. Uncertainty and sudden volatility spikes will be on the menu, however, of this year. There's no avoiding that. But as an ex-French PM said in an interview as reaction to US President's speech in Davos yesterday, people should not react to words, because there are a lot of words that are being spread by the White House and its president today, but rather react to actions. While he was saying this regarding the political and geopolitical context, was also valid and true in the market context. That's what telco trade is all about, right? Stripping out the noise and cutting the grease from overreaction. But the best way to manage the stress, the periods of overreaction, oh gosh, I feel like a therapist now, is to have a diversified portfolio. I'm not saying that you should sell everything that you own from America and move away. The European defense is clearly less exciting than the US technology buddies, if nothing, in the idea of what's being built. But spreading exposure to different sectors and to different geographies help tempering risks. Look at the Korean stocks. They don't even hear about Iceland. Oh wait, Greenland. Stay with Greenland. Now let's come back to South Korea a little and talk about the importance of hedging against the currency risk as you diversify your portfolio away from the US and away from the US dollar. Kospi's stellar market performance since last year doesn't necessarily reflect the rest of the Korean economy. If that's any comfort, the grass is not greener there, it's just the same. The Korean economy actually contracted in the last quarter of last year. Yes, I will say that again. The South Korean economy contracted by about 0.3% in the fourth quarter of last year, missing the expectation of a 0.1% growth due to weak domestic demand and declining exports outside semiconductors. In short, the technology is also driving the South Korean stocks higher these days, as it is the case in China as well, where the rally in technology names masked the weak domestic demand, the property crisis, deflation, and aging population. As a result of the weak fundamentals outside tech, the Korean won has been weakening since last year, meaning that part of Kospi's impressive gains comes from the won's weakness. So what I'm trying to say is that make sure to hedge your currency risk when you go to adventure in Asia. And even if you're not in the US, when you go to adventure in US dollar positions, because they are also being carefully hedged today by European investors, for example, simply because the US dollar is no longer that natural safe haven and is unlikely to save you if global markets are hit by a sell-off, assuming that the sell-off is triggered by the US policies, of course. And I think that that's the biggest risk. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. Don't forget to hit the like button on these videos to let us know that you enjoy them. And just don't forget to enjoy your day with the taco trade and the relief. Now, I will meet you again tomorrow. And until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.